When you think of Warren Buffett, what comes to mind? Do you think it's surprising that he made many mistakes at the start of his career? He made mistakes when he thought predicting stock prices was the way to go. He made mistakes thinking that being a stock trader meant he should watch the charts and do technical analysis. He realized after several years that his methods were getting him nowhere. So he adjusted and adapted. What did he do? Keep watching and you'll find out. He started making investments in publicly traded companies by focusing on the businesses themselves. He bought into a company and stopped worrying about whether its stock would rise or fall in the next day, week, month, or year. He had no idea what the stock price would do. In fact, he didn't care. While he had no idea how the stock market would perform, he was familiar with the business world. Warren Buffett knew how to evaluate a good business. He has devoted his entire life to this one pursuit. The good news is that he didn't have to be a genius to do this because he surrounded himself with people who were like-minded and brought out the best in him. He determined that you don't need high intelligence. It wouldn't help him. He'd only end up overthinking and overanalyzing, which could even make things worse. You can get by just fine without a high-functioning intellect. So, what exactly do you need? There needs to be a shift in your mental perspective. Nearly every investor has the wrong mindset when it comes to stocks. They view stock prices as something they hope will rise over the coming weeks. If they fall, they'll feel bad. Warren Buffett feels good about it because he can buy more at the lower prices. He has a much longer outlook. He considers how much the business might be worth in 10 or 20 years. He started out by investing everything he owned in one single business because he believed in it. He considers stocks to be a representation of American business. He has invested at least 80% of his wealth in American companies. He has no interest in accumulating any more possessions, though he does hope to provide a comfortable housing for his loved ones. But having 5 houses doesn't mean anything to him because he'll be content with just one. There are frequently more problems with multiple properties than with one, so having more than one doesn't make him happier. Warren Buffett is awe-inspiring to many in the business world, but he is just a man, and not a very complex one at that. There are 2 things that truly make him happy when he is making an investment. 1. He has always known that with his time, his investments grow. His point is that if you've learned your lessons about what to buy beforehand, this investing game, as he calls it, becomes incredibly simple. He is not investing in stocks but rather in actual parts of American companies. He even likes it when stock prices are falling, as he can then purchase even more shares. Second, he enjoys working with a team of trusted people. Although he could make more money working alone, he prefers working with others, people who put their faith in him. Have you ever given any thought to what would happen if an individual put all of their attention and energy into their business rather than seeking to increase their wealth through playing the stock market? Okay, let's pretend the stock market doesn't exist. Private purchases, such as those made when acquiring a house or apartment, are still considered investments. So now you might be wondering, how can I best put my savings to use? What do you intend to do with the money? Put it away or invest it? If so, where? If there were no stock market, people would be so much better off in terms of purchasing businesses. Rather than being preoccupied with the daily fluctuations of the stock market, they would devote their attention solely to the running of businesses. If someone makes the business their primary focus, they won't have to worry about being sidetracked by however the stock market is fluctuating. More people in the United States are wealthy or have higher incomes now than at any time in the country's history. For the first time in history, home buyers can secure mortgages at historically low interest rates. You now live in a society where even the poorest 5% are better off than the rich were, say, 50 years ago. Better healthcare, education, entertainment, and transportation have all become increasingly available to all in recent decades. So why invest in American businesses? Foreign investors have always had access to a secure and accommodating market in the United States. The United States is an excellent location for doing business because it has a legal system that is stable and transparent, low taxes, exceptional infrastructure, and access to the most profitable consumer market in the world. Additionally, international investors may choose to diversify their risk by investing in the United States. This is especially true if the returns on the financial markets in the United States have minimal correlation with the results on the financial markets in the investor's home country. Many aspects of society, from the most minute to the most fundamental, have been made better as a result of modernization. One example of the latter is the modern-day trading market. Now the United States can be considered one of the most important economical hubs in the entire world. It is difficult to imagine that this nation has only been around for approximately 200 years. But it has become enormous in terms of economic development, and it will only continue to get stronger and stronger in the future. As mentioned before, the United States, unsurprisingly, has seen the most development. No other nation has made as much progress as the United States. 3 generations ago, the United States of America had a population that was less than 1% of the global total. Immigrants didn't come here with suitcases full of gold, and their work ethic wasn't any better to that of the rest of the world. They all put in the same number of hours, all have similar intelligence levels. Perhaps they had a little advantage regarding initiative and global travel. Today, however, America controls 20% or more of the world's wealth. It's hard to believe that anyone in the government of the late 1700s would have believed you if you'd told them their great-great-grandchildren would be taking to the skies in airplanes just 3 generations from now. They'll be able to keep themselves entertained with their smartphones, get all the medical care they need, and everyone would have a car. You would most likely end up in a mental institution. If you look back a century, you'll see that an hour of work didn't get you nearly as much as it does today. American business have proven and will continue to prove that they are where I want to keep my money. According to Warren Buffett, buying an index fund is the finest long-term investment strategy. The standard measure is the Standard & Poor's 500. It's an index that follows the stock prices of 500 major American firms trading on the US markets. It is not necessary to be an expert in order to follow his advice to invest in the S&P 500 index, which tracks the performance of the 500 largest publicly traded companies in the United States. This is probably the easiest way to invest in American business, and over the long term, it's possibly the best way. What do you think then? Is your plan to strictly adhere to Warren Buffett's recommendations, or to make some minor adjustments while still retaining the same basic concept? Feel free to share them in the comment section below. Thanks for watching. If you want to learn more about how to get rich and maintain a wealthy mindset, click the videos on the screen.